Ladies and gentlemen, welcome back to the channel. We have all of your Tesla stock breaking news that you need to know for this sunny Sunday afternoon. By the way, happy Easter, but we have some things to discuss, including a new update for FSD V12, this time 0.3. And it's really making a lot of noise out there. I mean, FSD in the last couple of months is like a totally new product. I guess technically it is. Now we're on the neural net network. And now Tesla is no longer training compute. This means we're going to see exponentially faster progress than anything you have seen in the past. And I think you're getting closer and closer to the holy grail of good news for Tesla, and that is the Robotaxi network. That's fundamentally the end goal for a lot of Tesla investors from the start when the stock was trading at $400 per share. All everyone talked about was the Robotaxi network. Now we're closer than ever, and Wall Street could care less. It's not even a thought in people's minds. I think that's kind of flawed. With that said, as I just said, Tesla's FSD V12 3.3 is rolling out to vehicles right now, just days after 0.2 started to launch in vehicles as well. And now that Tesla is no longer training compute, that means the progress that you're going to see can be very quick. Think about it like this. It takes a human time to process, time to learn information. A computer can learn information pretty much instantaneously. So if Tesla is really no longer training compute, then that means the progress could be a lot faster than people think. I think most people are preconditioned for this slow rate of progress on FSD. And I think we need to be prepared for something totally different. And that is why in the last video, I put out my projections for 2025 and what Tesla stock could look like if we do get the Robotaxi network that launches in 2026. Wall Street, they tend to price in about 12 months ahead of time. So by 2025, we could be pricing in 2026 when we get the start of the Robotaxi network, potentially 2025 as well. Tesla has to figure out the liability issues, but the next 12 to 24 months, I expect you're going to start seeing the rollout of the Robotaxi network. And that's where you get Tesla stock to all-time highs. That's where you get the stock to, $500, $600, $700 per share. That's going to make these prices seem like a damn bargain. Someone reached out to Holmar's catalog asking him if he had tried 0.3, the latest iteration of FSD that just came out over the past 48 hours. This individual named Zach says 12.3.3 is amazing, genuinely effing mind-blowing. And he says it's better than the last version of 12. And he says much better. And let's be honest, if Tesla's goal is a Robotaxi network, cars that can drive themselves, do Uber rides, essentially taxi rides, you're getting pretty dang close to that. The biggest issue is liability. Who takes liability if the car crashes or, something worse than that? That's the biggest hurdle. But Cruise and Waymo were operating just fine. They were taking liability with far less superior technology. So I think Tesla's going to figure that part out. And I wouldn't worry too much about that. Meet Kevin writes on X, air traffic control just radioed us and requested, quote, I stopped shorting Tesla. Message accepted. Can we land? I don't know if he's trolling here, but that's pretty funny if that's true. Zach on X says first drive done on FSD 12.3.3 and it's phenomenal. I've had FSD on my Model 3 for 3 years and this is the best build I've ever driven to date. Zero disengagement to the drive to Santa Monica. Supercharger was very confident, smooth and human-like even in the rain. Which when we do get hardware 4 rolling out to more vehicles and FSD training on hardware 4 more, that's going to be an even again, a step up improvement because there's not much you can really control with weather conditions. If you're not using sonar, if you're not using, other LiDAR or anything like that, you can't have like whiteout conditions and use FSD. So that's a little problematic, but that's going to be closer to being solved with level 4. Michael Baylor on X says, I have followed FSD development since the beginning. Always thought the price was too high given the unpolished product. I think with V12 that may finally be changing. Just tried my commute and no interventions. We'll need to test more. The free trial is great. And then he says, based on what he's just seen, he will be losing $200 a month. That is in reference to the subscription service that Tesla offers. Instead of paying $12,000 up front, you could pay $200 a month and subscribe to FSD. And Wall Street, they're gonna love that. Wall Street loves software as a service. It can be a very sticky, high margin, recurring source of revenue. So no matter what happens with the delivery side of Tesla's business, no matter what growth looks like, that software as a service revenue is valued a lot higher, which can help justify Tesla's relatively higher valuation. And I think it's important to remember that all vehicles come with the cameras and the chip to run FSD already in the car. So whether or not anyone that buys a Tesla, no matter what it is, they're already taking the hit from the software, from the hardware in the car, more so the hardware in the car, the cameras and whatnot. When people flip on that FSD for $200 a month or buy it for $12,000 outright, that's like 95% net margins. Take taxes out of that, who cares? Call it 90% gross margins. That's going to be valued a lot higher than I think a lot of other software as a service platforms. Even when you look at something like a Meta that has like 70+% margins, FSD's way higher than that. So if you are a Tesla investor, I think this is really the time that makes the most sense to be bullish on Tesla. Of course, demand's terrible for autos. Shout out Fed Jerome Powell. The economy's not in a fantastic place, even though the data says it is. Talk to people out there. They're not spending as much money. They're really starting to cut back. And the true inflation that you've seen over the years has been a lot higher than what the data says it is. With that said, you are closer to the holy grail of positive catalyst for Tesla. And I can't be bearish on that, especially with the rate of progress that we are seeing. It leads me to believe that maybe on this next upcoming earnings, we get some more solid guidance around the initial launch of the Robotaxi network. Even to launch in a city or two would be a big deal for Tesla. Sawyer Merritt reached out to MKBHD and says he should do a follow-up video on Tesla's latest FSD beta version, 12.3.2.1. Now it's just 0.3, so we did again get this latest iteration, and Sawyer Merritt posted this on March 29th. Today is March 31st, and we got another new update just in the last 48 hours or so. Marquise Brownlee, MKBHD, says, I have heard good things. Paid for it on the Cybertruck. Hopefully I can test it soon. So another video is probably coming. This is pretty spectacular. Type in full self-driving to Google Trends, and this is what you find. A parabolic move higher. Now, of course, there can be a lot of investors searching about FSD, but that usually doesn't trigger a 100 reading on Google Trends. So this is probably a lot of people that are, maybe they were familiar with FSD, maybe not, but they're definitely starting to search about it a lot more, which is a pretty good indicator that, you know, this free trial is going to be very successful. And maybe even by this upcoming earnings, which are expected to be on April 17th, we could get some good news on the take rate of FSD and just how many people are signing up. That is going to raise EPS estimates. As I've said before, two things that drive a stock higher. In the short term, it's EPS estimates going higher, profitability estimates moving higher. Long term, it's profitability actually meeting expectations and then exceeding expectations. So in the very short term, if you're betting on the stock not being the worst performer in the S&P 500 again for Q2, I think earnings are going to be a big catalyst. I think FSD is going to be a focal point of the earnings and even potentially where we go next, how long the Robotaxi could take. And I'm sure by now you guys already know my take. I think Tesla is going to focus more on profitability instead of cutting prices at all costs to grow unit volumes. I think, number one, they trashed that with not giving full year guidance. Number two is Tesla recently raising prices on the Model Y in Europe by 2,000 euros, as well as, coincidentally, on my birthday tomorrow, Tesla is raising prices in the US, as well as in China and other markets like Canada by $1,000 on the Model Y coming tomorrow. So deliberately raising prices, going against maybe what they should be doing if they're trying to grow unit volumes, trying to grow profitability. Raising prices is exactly what they should do. Even more recently, Tesla lowered the work week for their Chinese employees from 6.5 days to 5 days, and now they're giving out this FSD free trial again with 90+% margins. All of that is a good sign that Tesla is now focused on profitability. And again, like I said in the last video, I don't want to sound too redundant here, but I think it's important that people understand this. I said this in the last video. If Tesla wants to actually, develop and build their Giga Mexico, if they want to build all of these expansions to Giga Texas, if they want to have the capital to ramp the Model 2, continue to ramp the Cybertruck, you have to focus on profitability. You have to, because your R&D spend is directly going to be hit if your profitability continues to fall. If you can raise your profitability, then you can invest more and become more profitable. And I think that's kind of what Tesla is aiming for here. But hey, that's just my opinion. Let me know what you think down below in the comment section. I know one thing's for sure, we're going to get a lot more clarity coming on April 17th, and I think a lot of people are way too bearish. Rightfully so. Again, if you're maybe not the sharpest crayon in the crayon box and you're kind of, not looking at these things that we are here on this channel, you're going to say demand's weak. You're going to say margins are really not doing much. They're not going to improve that much. You got to read the tea leaves on this one. And I think we're in for some good news coming on April 17th. And it is now confirmed via Rowan Patel's X account. He is the policy head at Tesla, and he says both FSD subscription in Canada will be ready before the 30-day trial ends, thanks to our Canadian customers for their enthusiasm, patience, and excellent feedback. And let me share this with you. Thank you, Tesla Chan, for pointing this out. I think it goes very well with the concept of what we're talking about here in this video. This is actually the earnings transcript from Q2 2023 earnings. So about a year ago, give or take. Elon says, like Airbnb, like maybe sometimes you allow your car to be used by others. Sometimes you want to use it exclusively, just like, Airbnb, doing Airbnb with a room in your house. I think it does make sense to sacrifice margins in favor of making more vehicles because we think in the not too distant future, they will have a dramatic valuation increase. Goes on to say, I think the Tesla fleet value increase will be to the point at which we can upload full self-driving and it's approved by regulators. It will be the biggest step change in asset value, maybe in history. Which is an interesting way of thinking about things. This first paragraph here, Elon Musk says it's not about getting more share. It's just you think of every car that we sell or produce that has full autonomy capability as actually something that in the future may be worth as much as 5 times what it is today, because your average passenger vehicle is doing like 10 hours of driving a week. It's sort of, if it's 1.5 hours a day on average, that's 10 hours a week-ish. If you've got an autonomous vehicle that is able to operate autonomously, then it can be used like Airbnb. So the actual value that could be implied in owning an autonomous Tesla could be huge. But he does say here it makes sense to sacrifice margins. If Elon or the Tesla team even hints at cutting prices again, Tesla stock is not going anywhere here in the near term. Google Trends data has officially shown the Cybertruck seeing more search trend activity than the Model 3 and the Model Y. I think it's only a matter of time before we see a halo effect, and potentially, now that we are seeing this level of activity in searches with the Cybertruck, that maybe that halo effect can allow Tesla to get that demand they would have had to cut prices for before. So maybe Tesla's in a scenario where the Cybertruck is helping out the brand so much, they can actually raise prices and still give you decent deliveries, maybe not as high as some people were expecting or would have hoped, but still, let's say 10% year-over-year growth, let's say 2.2 million deliveries or so, but increased margins, that could be huge. And maybe this Cybertruck is helping Tesla to offset that demand they otherwise would have seen via cutting prices. The Cybertruck has recently went from 35 to 39, the Model 3 going from 33 to 36, and the Model Y going from 34 to 35. The Model X did fall a little bit from 10 to 9. The Model S actually fell as well from 13 to 12, but overall, very solid numbers that you were seeing on your Google Trends data. Global inventory numbers for the Model Y ticking down a little bit today from about 7,200 down to 6,700, so a decrease of almost 500. The Model X, the Model S, and the Model 3 are seeing a sharp uptick in inventories. I wonder if maybe production started to crank up a little bit, because we've seen these inventory numbers be so low for a long time now. That implied maybe low production, higher demand, right? Supply and demand imbalances. Maybe production's increasing. That could be good news as we are leaving Q1. If production increases for the Model 3, especially the rollout here at Fremont, has been slower than some people expected, maybe that means next quarter deliveries could be better than expected. Tesla is currently running about 4,000 different ads with Google, other ads on Instagram, Facebook, and elsewhere. Overall, Tesla's probably running about 7,000 to 8,000 ads globally. In other news today, it looks like BYD is slowing down plans to build a factory in Vietnam. BYD agreed to retain 100 hectares of commercial land in Vietnam, but they're slowing down their plans on developing this facility. As you know, that could be good news for Tesla, as everyone is kind of fearful that BYD is going to eat Tesla's lunch. Okay, correction. Not everyone. Wall Street's a little concerned about that. I think you and me understand the real dollar hollers, the real profit money in the bank is with autonomous vehicles. So who cares about what BYD is doing? They don't have autonomous vehicles, and nobody's going to have them anytime soon. And by the time they do, Tesla's software is going to be so superior, it's not even going to make sense to develop it. Kind of like the charger network, right? Superchargers. Tesla was the first to roll that out. You can't even compete with that. There's no point in trying to compete with that. You just partner with them. And ultimately, that's the direction we're going in with FSD, is just outright licensing and partnerships with other automakers. Option activity in Tesla stock over the past week from hedge funds and institutions was quite positive, about 61% positive order value. You've seen 4,102 orders totaling $2.74 billion. You are currently sitting at the highest short interest you have been at for Tesla in about 18 months. I think shorts are really set up in a vulnerable position heading into Tesla's earnings. Now, the next big catalyst is going to be delivery numbers, which come out on April 2nd, or expected to come out on April 2nd. We're going to talk about that a lot more in the next video, but long story short, I believe as long as the numbers are not terrible, we're probably going to get a pass by markets. And a pass means Tesla stock has probably already priced in a bad Q1 number, with the stock being down almost 30% for Q1. Nonetheless, Tesla's short interest of free float is 3.71%. You have $18.04 billion currently in short positions. Cost to borrow fees have been fluctuating between 1% and 10%. It looks like on Friday there wasn't as much shorting activity taking place in Tesla, which is interesting because we were heading into an extended weekend. And I know I said Friday. of course, Thursday was the last day of trading. Tesla stock over on StockTwits. This is really a sentiment barometer, more or less, for retail investors. Is neutral today at 48. Yesterday, you were bearish at 43. So you're seeing message volumes, let's see, pretty much stagnant from yesterday, but sentiment is improving. So that is good heading into the start of a new week. Like I said, message volume's pretty stagnant. Today it's at 37, which is low. Yesterday was at 38, which was also low, about 1 point lower here. But the participation ratio is now at 57. Yesterday was at 55. So there's more accounts talking about Tesla, but each account is sending less messages. So there's overall more people talking about Tesla stock right now. Last but not least, Gary Black on X writes, as a longtime Tesla bull, I sincerely hope 2024 is the year FSD finally gets to 99.9% intervention free. We all see the incredible progress FSD 12.3.3 now has made over V11, but it won't change fund managers Tesla's valuations. It's just supervised FSD. Tesla at $175 is the S&P 500's worst performer year to date, despite FSD's amazing progress. As Craig Trudell of Bloomberg has noted, this is Bloomberg, okay? Doomberg. Keep in mind what Doomberg is saying. Based on Elon's track record, investors aren't ruling out the possibility that, quote, the boy who cried FSD, as Elon dubbed himself last year, is overstating the feature's ability now, just as he has every year that it's been on the market. I'm not agreeing with Craig, just pointing out the obvious skepticism in the market. I think Elon is under exaggerating FSD V12 3.3 now. Why I say that is because compared to other individuals that, don't have follower bases, that don't work for Bloomberg, that have no financial gain in saying good or bad things about FSD, they're all saying remarkably positive things, that this is a product in which is really revolutionizing Tesla's FSD to a point and a scale and a degree that we have never seen before. And it's the rate of progress. If you could put the rate of progress of FSD in a chart in percentage form, you would see like 1, 2, 3% improvements in V11 and other additions. And you would see like 50% rates of improvement right now. It's off the charts. And this is actually, very exciting for me as a contrarian to the popular opinion right now that Tesla is going to be a terrible stock in 2024. The more people that are bearish now, the more you can upset the bears and the more shorts that have to cover, the more hedge funds, institutions that need to get reallocated to Tesla, the more retail investors jump back into the stock, the higher the stock ultimately goes. And I think, again, this upcoming earnings can be a big catalyst for that. But we will talk about the upcoming earnings a little bit more in the next video with a main highlight on tomorrow's, 2 days from now, Tuesday's big event on April 2nd with Tesla's delivery numbers. In the next video, I will be going over my expectations for Tesla stock this week, as well as the data coming out. The data is going to be big this week. You have some pretty big data that I think you need to know as well that could move the markets. In the meantime, hit the like button, subscribe to the channel. Let me know what you think about this information down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.